Good morning, everyone, and thank you for joining us for today's chat session, October 29th, 2014. My name is Dean Rogers, and I'm the Senior Analyst at Kase & Company. And today we're going to be going through the second part of our four-part series on Kase Wave Analysis. Now, as always, we know that trading is risky and that anything that we cover in these chat sessions is not to be construed as any type of consulting or advice. This is just good, solid information. You know, we're hoping that it will help you become a better trader and a more informed trader. All right, so as I said a moment ago, we're going to be covering the second part of our four-part series on Kase Wave Analysis today. Now, in part two, if we have a list of waves, these are our learning objectives. So if we have a list of up waves and down waves, at the end of this, we should be able to demonstrate how we can calculate the 9 core Fibonacci wave projections that Kase & Company uses. Now, what you'll find as you study Fibonacci wave analysis is there's lots of different combinations or projections. We have 9 core Fibonacci wave projections. We actually have 5 impulse wave projections. We have 3 corrective wave projections, and then 1 wave projection that stands on its own that we call the trend terminus. And we'll go through all of the details of those here in just a moment. So when you're going through, really what you should be able to do at the end of this training session here, this 30-minute training session, you should be able to identify the impulse and corrective portions of the wave, show how the Fibonacci sequence and phi are derived, explain why the Fibonacci sequence is an important part of the wave analysis, also explain the difference between the impulse and corrective wave projections, demonstrate the ability to calculate the impulse and corrective wave projections, and then assemble a grid of our 9 core Fibonacci wave projections for the set of waves that we're given so that we can do further analysis on those in parts 3 and 4. All right, so let's talk a minute about phi, the golden mean, the golden number. Phi is a very important number in nature. Phi is something that comes up time and time again in nature, and really what it comes down to is to calculate phi. We can take any 2 integers that are added to one another. So for instance here we have 2 random integers that Cynthia and I in another course we were teaching had put together. We have 1201 and 2015. So 1201, 2015. We add those 2 together, that makes 3,216. You add 3,216 to 2015, that's 5,231, and so on and so forth. Okay, so we continue to add the 2 sequential integers together, and we get a sequence of numbers that are increasing over time. Now, if we divide the second number by the first number, we end up getting something that is going to be very close, and ultimately will end up approaching 1.618, which is the golden ratio, or phi. So phi is a very important number. Again, it's something that the Romans used when they were constructing the aqueducts. It's a number that comes up in nature over and over and over again. And this is what really drew me personally to technical analysis, was this, you know, the concept of phi, Fibonacci wave analysis, you know, that whole, the Fibonacci sequence really coming out in the markets. I was, my background was originally in computer science. I'm a big math guy. I really enjoy math. I like math. I'm intrigued by numbers. And when I really started to see this, the way that this played out, when Ms. Kase started showing me how this played out in the markets, it hooked me. The other numbers that we're going to use is phi prime as well, which is 0.618. It's actually the first of these sequential numbers divided by the second. And really the numbers that we're going to be using are phi 1.618, phi prime 0.618, and then phi prime squared, which is 0.382, and phi squared 2.618 in a lot of the calculations that we're going to be doing. Now, one of the other things is the relationship between phi and Fibonacci. All right, so those of you that are familiar with the Fibonacci sequence, this again is a sequence that shows up time and time again in nature and in human psychology and in the markets. So if we look at the different numbers, it's basically the same thing. The Fibonacci sequence is 1, 1, 2, 3, 5, 8, 13, 21, and so on. And what we're doing is we're actually adding 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, 5 and 3 is 8, and so on. So just like we did on the previous slide where we added the two sequential numbers together time and time again and then divided those by one another, the second by the first, it eventually approached 1.618 or phi. Same thing here with the Fibonacci sequence. Now, the Fibonacci sequence is special because the Fibonacci sequence shows up a lot in nature. You know, we have 5 fingers, we have 5 toes, we have 2 eyes, 1 tongue, 2 nostrils. I went into my daughter's 4th grade class last year and gave a little lecture about Fibonacci sequence and you know, sat with the kids and identified all the things that we could think of on our bodies and in nature. You know, on animals or on trees or whatever it may have been. And that's, again, something that we're going to use. I mean, any of you that have ever studied Elliott wave know that the market trends in 5 waves and corrects in 3 waves. All right, so let's get into the actual meat of this lesson here, forecasting with impulse waves. Now, we discussed what an impulse wave was last week, or the impulse portion of a wave, and that is the x, y portion of a wave. So a wave is made up of 3 points, x, y, and z. X and Y, as we can see on the right side, are for a rising wave, Y will be higher than X, and in a falling wave, Y will be lower than X. Now, if we take the factor between X and Y, the absolute value, or just Y minus X, and we multiply that by some factor, and then add that to Z, that will give us our Fibonacci wave projection. So our target will be plus Y minus X times the factor. Y minus X will be positive in the up market and negative in the down market. As far as the values that we're going to use, the factors that we're going to use 0.618, 1, 1.382, 1.618, and 2 times 1.382. So all of those are derived except for 1 are derived from the Fibonacci and Phi sequence, Phi prime. Now 1 just naturally is an important number. It's a whole. And we name these projections. Now, this isn't something you're going to find anywhere else. We name these because we use these in our weekly forecast, and that's a lot easier to talk about the smaller than projection rather than the 0.618 or Phi prime projection over and over. So we use the nomenclature of smaller than, equal to, intermediate, larger than, and extended for the 0.618, 1, 1.382, 1.618, and 2 times 1.382 values respectively. And those have symbols that we'll use in the charts of SEIL. All right. So we'll go through some examples here. On slide 8 here we have the smaller than target, which is Phi prime. That's our multiplying factor. And if we look at this wave here, we have the wave 57.18, 77.60 down to 67.37. So if I take my smaller than calculation, which is going to involve me taking 77.60 minus 57.18, multiplying that by 0.618, that gives me a value of $12.62. I will then add that to 67.37, which gives me a projection of 79.99, and the actual high that was made, or swing high that was made before we had a significant pullback, was 79.96. So we met that smaller than target. This wave met the smaller than target within 0.04% of price. All right, so very, very close. Here we have the equal to wave projection. So in this case, we have the wave 46.25, 56.27, 47.77. Formula here that we're applying, we're going to take the difference between the impulse portion of the wave, the YZ. So we're taking Y, which is 56.27, minus X, which is 46.25. That gives us a value, and then we're multiplying by that by the factor of 1, because here we're looking at the equal to target, and that's going to give us a value of 10.02. If we add that to our Z, 47.77, that gives us a projection of 57.79. The actual swing height we here was right around 57.90, and so that's within 0.19%. Again, very, very close before we had a significant pullback. The intermediate, we're using the 1.382 projection. Same formula here. The only difference is we're using a multiplying factor of 1.382. So we look at the difference between the 57.90 and 47.70 or 47.77, multiply that by 1.382, add that to 48.31. That gives us a target of 62.31. In this case, the swing high was 62.63 before a significant pullback took place. That was within 0.5%. The larger than target, very, very important. Okay, when we're looking at all of these, the most important wave projections, based upon my experience and our study, are the equal to and larger than. The smaller than is also pretty significant because generally speaking, and you'll hear me say this time and time again, once you meet the smaller than target, you usually have an extension to at least the equal to target, and that's based upon studies that we did a few years ago. Equal to target is a reasonably normal correction. Larger than target, generally speaking, corrections will hold the larger than target, and 5-wave trends will usually end wave 3 at either the intermediate or larger than targets. They don't usually extend beyond the larger than target for wave 3. That's usually done in wave 5. So the larger than target is a very important measuring factor. It's based upon phi, 1.618, same value, same calculation here. We're taking the YZ portion of the wave, multiplying that by 1.618, then adding that to Z. In this case, that target is 81.22 for this particular wave, and that ends up being within 0.18% of the actual 81.37 swing high. All right. The X, or sometimes you'll hear me refer this to as the XC or extended wave C, is actually a projection that we picked up. It's 2 times 1.382, and it's a value that many times will line up with the trend terminus, which we're going to look at in a moment, which is 3x, and will also be near the end of a 5-wave trend. Very rarely do we see markets extend beyond the X or the extended wave of projection or the trend terminus without a major pullback or correction. So this is kind of the lowest of the low targets that we look at in most cases. Sometimes the trend terminus or what we're going to look at here in a minute, the 3x could be a little bit lower. But X is a very, very far out target. And it's calculated in the same way. We take the YZ portion of the wave, or XY portion of the wave, excuse me, multiply that by 2 times 1.382, add that value to Z. In this case, the target was 77.47, and the actual swing high was 77.60, and we saw the target met. We saw a big pullback after that. Doesn't necessarily always mean that it's the absolute end of the trend, but generally mean that you're going to at least get a very significant pullback and correction once this target's met. Now the trend terminus, which I've been talking about for a little bit here, we call that T. In some cases I call it the 3x. We used to have this very, very complex formula that, for the life of me, I did a lot of studying on this, trying to find where we derived this from. Somebody might be able to tell me, but I couldn't find it. But, it was basically e to the natural log of x plus 3 times the natural log of y minus the natural log of x. And it was this formula that I could never, never memorize and was really, not complex, but, to do it by hand, you couldn't do that, easily by hand like you could do these others. And at some point, we had a programmer that was working for us that was also, he had a mathematics background, a math degree, and he distilled this thing down to y cubed over x squared and made my life 1,000 times easier. So y cubed, my beady little brain can remember y cubed over x squared. So when you're looking at the trend terminus, very simple. Calculation is y cubed, in this case 2885, divided by x squared, which was 2691. That equals 3177. The actual target was 32, so that was within 0.71. Many times we will see the trend terminus and XC, or the T and X projections, right in line with one another. That's the case here. That happens very often. It's extraordinary how often this actually happens. And so a lot of times that will be the end of our trend. And so in this case, we have this very small wave at the very beginning of the chart, 31.25, 33.94, 32.36. The trend terminus, or T, projection was, which is y cubed over x squared, is 40.03. And then the actual, XC, or X, extended target, the target is 39.80. So those are within 23 cents of one another. The actual swing high is 39.86. So we, within 1%, or really within 0.5% of meeting that actual target. And there's these two different targets based upon different factors that are showing us confluence at that point. Now we also have forecasting with corrective waves. Corrective waves do not use X. The corrective portion of a wave is the YZ leg of the wave. So in this case, we're going to basically take the difference between YZ. We're going to multiply that by a factor of phi squared, or phi cubed, which are going to be 1.618, 2.618, and 4.236, and then add or subtract that value to Z for up waves and down waves. We call these P1, P2, and P3. These are corrective projections. So we've already shown 5 impulse projections, the smaller than, equal to, intermediate, larger than, and X, or extended. And then we showed the trend terminus, which kind of stands on its own. And now we're adding in the last 3 core wave projections that we at Kase use, and those are the corrective P1, P2, and P3 projections. With these here, we're using, again, phi prime, and phi cubed. In this case, we're looking at P1, which is phi to the first power. So we're multiplying our factor, our difference between YZ, which is 37.47 less 33.98. We're multiplying that by phi 1.618. That gives us a value of 565. We're then adding that to the 33.98 Z point to give us a projected target of 39.63. In this case, the high was 39.86. Now I'm going to speed up a little bit, go through phi squared. Same thing. We're looking at the difference between YZ portion of the wave, the corrected portion of the wave, multiplying that by phi squared, or 2.618, and then adding that value to Z to give us a projection of 36.50. The actual swing high was 36.45. And then phi cubed, or P3, we're going to 4.236 is our multiplying factor for the difference between the YZ portion of the wave. We add that value to Z, so we have 57.18 plus the 23.09, which was our multiple, our factor derived from phi cubed, and that gives us a projection of 80.27. Our actual swing high is 79.96, so we were within 0.5% of meeting that actual target. And finally, the P3 in many cases will also end up line up with the trend terminus and extended, or T and X targets. Again, coincidental, doesn't always happen, but many times you'll see one of these corrective wave projections line up with one of the impulse projections, and many times the highest projections are going to be either the T, X, or P3, and there's quite coincidentally, and these 3 will line up together in 5-wave formations, or 5-wave trends, or even sometimes nested complex 3-wave moves. So in this case, we have the T, the X, and the P3 all lining up within, a couple cents of one another. Here, the trend terminus target is 98.17, the extended target is 98.36, and the P3 is 97.94. And so all of those were, very, very close to the actual 97.87 swing high that took place. So for those of you that are not familiar with, our websites, kasestatware.com has lots of great information about our trading indicators, a lot of educational materials. We post the archive of these chat sessions there. We've also just relaunched our corporate or primary website, kaseco.com. This is also not just corporate, it's actually, we just started a blog, and so we've been posting a lot of great information there. Keep an eye out for a really good article on Hertz that I'm going to post later today or tomorrow. That should be a very interesting read, and it involves some of this Fibonacci wave projection that we're talking about here, as well as combinations of other factors we use. And then we have a lot of our energy products up there on the kaseco.com. I'm also going to be archiving these chat sessions there. So we've been very active on Twitter. I hope to get more and grow our followers on Twitter so that we can put out a lot of great information, including these videos and stuff like this. So our handle is Twitter, or our Twitter handle is @Kaseco. And then if you have any questions or comments, feel free to email me, dean@kaseco.com. Now, before we end the session today, I want to take a few minutes to go through the calculations on a spreadsheet. One of the things that we did last week was we picked waves, and I've already picked most of the up waves for this move. Now, this is actually the December crude oil chart. I cut it off on October 3rd here intentionally, because next week when we start to look for the confluence points, there's something really cool that's going to come out of that gave us a very, very big clue as to exactly where crude oil was going to stall in the last week. Now, it doesn't necessarily mean that the move down is over. I still think that crude oil will continue to move down, even though we're in a correction right now. But the 79.10 swing low on December crude was nailed perfectly by a confluence wave projection. I'll actually probably show that to you today even. So I've already picked the waves up here for this move. I've got the waves up shown here in a spreadsheet. And this is the type of spreadsheet that we lay out. I used to lay these out by hand, and now we have programs that actually go through and pick the waves. So, you know, hopefully one day we'll have those available publicly. We actually do have that in a program or an application on Bloomberg called Case Outlook. So for anybody that has a Bloomberg terminal that's watching this video, take a trial of Case Outlook. It's just the apps, Case Out, K-A-S-E-O-U-T, go, and then you can take a trial there, and it will do all the wave picking and calculations for you. You don't have to do any of this work. But for those of you that don't have access to Bloomberg, and until we can get a program written for the public that picks all the waves automatically and everything else, the easiest way to do this is in an Excel spreadsheet where you pick your waves and then you do your Fibonacci wave projections. Now, I know it might be a little bit hard to see here, but if you look at the formula, we're basically taking the difference between X and Y, or between Y and Z, and then we're adding that to Z, and we're multiplying that by our factor of 0.618 for the smaller than here. For the equal to, we're doing the multiplication by 1. I'm going to pause for a moment on each of these so that you can pause your video and write down these formulas in your spreadsheet. Here's the intermediate. Be sure to include your dollar signs because we're just going to drag these down and make it really easy to do these calculations on the fly. And this is a spreadsheet that you can just keep and continue to update time, you know, week in and week out, day in and day out as you're doing this type of analysis. I know it's labor intense, but it's worth it. And if you keep up with it, it becomes really easy. And again, you know, this is something that we're, you know, let us know if you're using this. Let us know that you want our product that will automatically pick these waves, because, you know, that's what we're looking for. We're looking for that demand, and the more demand we have, the more likely we'll be able to do it. All right. And then we have our XC, which is the 2 times 1.382. We have our trend terminus, which is y cubed divided by x squared. And then we have our P1 formula, which is just taking the difference between YZ and adding it to Z. P2, which is 2.618, and P3. Okay. Now, for each of these, I can just drag my formulas down, and I have all my wave projections now. All right. These are all potential projections that could be met over the next several months. Some of these have already been met, and we will go through and probably mark those out, maybe strike them out or color them, you know, color them red, like for instance this wave 64, 56, 96, 75. Okay, that's this first wave, 64, 56 up to 96, 75 down to 81, had risen all the way to 106.81. So basically anything up to 106.81 I can color red or something like that to tell me, hey, that's been met, it's no longer valid. All right. Then on the down waves, you know, really we have the one down wave, 106.81, 82.12, 103.66. Okay, so 106.81, 82.12, 103.66. That's going to be a very important primary wave. The market at this point had already fallen on October 3rd. The low was 87.22. So the market had just taken out this 88.40 swing low. It's really important because what did that tell me? What did I say maybe 10 minutes ago? Once the market takes out the smaller than target, generally speaking, not always, but generally, you will have an extension to the equal to $79. The recent swing low on crude oil within the last week or two, 79.10. We met that target, a target that's been forming for quite some time, months now. We met that target within 10 cents about a week and a half ago, and we are able to nail that target due to this wave analysis. Okay. Now, there's also other factors that contributed to this, and I'll show those here in a moment, and we'll really go into it next week. One of the things we have to do is we have to drop into an intraday chart like we did a daily chart. We're on a weekly right now. We're going to drop to a daily, and when we drop to the daily, I'm going to go to something a little bit more. I'm going to go to a Kase Swing 2 to give me a little bit more detail, and I'm going to pick the waves down from the 91 or from the 103.66 swing high. Okay, now I've done most of that work already. All right, I've picked the waves down 103.66 to the 97.32 up to the 100.35 down to 95 back up to the 96.98 and so on. But one of the things that we can do, and this is a little trick that I wanted to show everyone that we ran out of time last week, you can actually cascade these. So you can see that, from 103.66, I can then start to pick waves down from 100.35. So what I can do in my spreadsheet to save myself a little bit of time is take the 100.35 and then all of the waves down from that point, not including this 97.32 because that wouldn't be a valid wave. I can cascade those down. Then our next point is going to be 96.98. All right, so I can take the 96.98 and I can grab these waves to give us a cascade, and then down from the 94.42, excuse me, down from the 94.42. Really, the only one left there was the down from the 94.42 was the 89.13. Okay. Now I haven't gone through. We're not going to go into the small waves down from 93.82. You can, but I'm not going to right now, just for time constraints or time reasons. Now, one of the things that we can see is I've already done the calculations here. I reversed my formula, but again, if you just do the y minus z, you can take z plus y minus z, and it'll always work out just fine because the y minus z will be negative for a down move or a down wave. So I've already got all of my calculations and formulas. Okay, I'm clicking on each of those, so you can pause the video if you want and capture those. And then I'm going to drag those down. Now I have all of my wave projections. I can go through, mark things that have already been met, and then I will be ready to look for confluence points next week. One little quick clue here. All right, my biggest wave down is 103.66 down to 89.13 up to 93.82. 103.66 down to 89.13 to 93.82. What's the equal to target? 79.30. All right, it was 79 for this wave. So my two biggest and most important waves on the chart. This was the wave down on the weekly chart. This is the biggest wave down on the daily chart. Both projected to this 79.10 area. Okay, our 79.10 swing low that we just saw made a few weeks ago, or about a week ago. Both of those projected, and this is what we're going to go through, the ability to identify these types of confluence points, these important confluence points. That's what we're going to go through next week, and that's, like I said earlier, where the real meat and potatoes for this entire analysis comes into play. All right, so thank you again for attending. I really appreciate it. If you guys have any comments, questions, please email them to dean@kaseco.com. Also follow us on Twitter. Our Twitter handle is @kaseco. We do have a Facebook page, LinkedIn, and I have an account on StockTwits. If any of you are on StockTwits, it's P. Dean Rogers. Check out our new website, kaseco.com, our forum, our blog. And again, if you have any comments, questions, or ideas, please send them to me. Thank you.